A lot is shifting in the fertilizer market, from questions around Iran's production to China's export stance and the pressure farmers are feeling from record high price ratios. Joining me today to break it all down is Josh Linville, VP of Fertilizer at StoneX. Welcome back, Josh.
Thank you. A little bit different surroundings. I'm on the road this week, but didn't want to miss a week of getting together with you.
I see that. It's been a long time. So let's start with this. We're hearing reports that Iran's nitrogen fertilizer production is set to resume after a couple of months offline. What are you hearing on that front?
So yeah, it's a lot of reports, a lot of rumors, like everything is in the fertilizer marketplace. But it does sound like after 2 months offline, their nitrogen production is set to recover back to full rates. And this has been a major thing that we've been watching, right? When you look at Iran, a lot of the world likes to look at them and say, well, they don't matter. We can't do business with them. They're sanctioned, they're tariffed, whatever the terms are, whatever economic blockade is in place, we can't do business with them, so they must not matter. They are the third largest urea exporter in the world as of 2024 data. They're one of the top 10 global anhydrous exporters. So they absolutely matter to the S&D. So if we can get their production back online, this can start to take away a little bit of this bullish slant that we've seen. But again, we do have to be kind of cognizant. They can come online, it can go back off just as quick as they started up. That US Iran tension is still a very, very big deal in that area.
Yeah, I mean, it's very volatile right now with them. So that's the global picture. What about closer to home? Farmers are still struggling with extremely high fertilizer prices relative to grain. How is that imbalance affecting them?
Yeah, and for a quick backstory, one of the things we do, we of course we're going to focus on the flat price, right? We always want higher grain prices. We want lower fertilizer prices. That's always the correct answer. But we look at it from a little bit different. We like to sit there and say, well, the value is between those two. And essentially what we do is look at the relationship and say, well, how many bushels of, let's say, corn in this example does it take to pay for a ton of urea? And then we look at that data over the years and you start to figure out, well, regardless of the high grain price, low grain price, whatever, a high value is worse because that farmer is spending far more bushels to pay for the input. And
Hmm.
it tells a dire story. We are leading into spring. And now this is not all time highs. This is for this time of year. But urea, UAN, and hydrous, phosphate, all of them are setting at the second worst ratio value that we've ever seen for this, middle part of February. The only major fertilizer that isn't, that's well priced, remains potash. And it literally couldn't be much more average if it tried. It is, you take all the weekly data going back to 2018, and it is dead set right in the 50 percentile range. It's right in the middle. But yeah, it's as farmers are looking to spring of 2026, I just about messed it up and said 25, 2026. It's it is a very high price proposition. And the farmers are feeling it. The farmers are talking about it. This is nothing new. It just puts it in terms more people can start to understand.
Okay, and that's interesting with potash because they obviously just dodged a bullet with the House voting against possible tariffs on Canada. Last but not least, let's turn to China. With Chinese New Year starting today, what should the global fertilizer market be watching for in terms of potential changes to China's export stance?
Yeah, so the expectation, let's go ahead and roll out with this is what we expect today. And what we expect today is that they will not be exporting any phosphate or urea until August of 2026. That is what they've stated. That is what's been rumored, and that's what's been talked about. And again, when we talk about that, they export normally 5 to 5.5 million tons of urea. They're a top five exporter. They are the world's largest phosphate exporter, 8 to 10 million tons per year. So if they are absent January until July, that is a massive, massive supply hole that's in the marketplace.
Hmm.
But with the New Year's going on, they're celebrating, they're having fun, they're doing all the things that everybody else likes to do when it comes to a holiday. When they come back, we will be watching for signs that they start to ease that export restriction, which we've seen before. There is no hard set rule that just because they've said they won't export again until August, that that's absolutely what they will adhere to. If they come back from the celebration and say, okay, let's take a fresh look at things like we've done before. Urea stockpiles are okay and production levels are good. Phosphate stockpiles and industrial demand hasn't been what we thought it was going to be. If they look at that data and decide we're doing okay, they could very easily repeal that export ban until August and they can pull that up. And if they do that, we're going to be watching for prices to fall around the world. Low probability. Let's not get our hopes up too much because fertilizer likes to cut our knees out from under us. But that is something that could help correct the global markets very, very quickly.
A little bit of fresh perspective is always nice for everyone. Josh, thank you again for your time. Enjoy your conference. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.